good afternoon, evening, morning, or night, whenever you happen to be watching it. Big Jake Little coming in with an update that got four news stories. All right, you Google either of the companies involved in the major acquisition we're discussing today in the renewables business, and you see about four things. So I really hope I'm doing a favor and getting the conversation going where it maybe ought to be a little higher given the gravity of the climate deal, right? So, without further ado, let's discuss my favorite, my number one stock pick for 2020 and beyond, which is kind of like to infinity and beyond. Different number, and that's actually the second Toy Story reference. So, go back through all the other videos and see if you can find that. First, before I jump into the numbers, I know it's been a long intro. Qualified to speak on this because I got the green belt back from the day in Taekwondo. Green energy, right? Hope you'll get a kick out of this. Look, we got the tape measure right there at 80 inch. It's 80 inches. The thing was on the fan right there. Check this out. Real footage. You know this is one take. Oh, all right. Now that the wheels are spinning, the windmills are turning. Let's jump right into these mind-blowing results. Okay, why Brookfield? What is it about this company? And I'm not doing this to pump up the price. Disclosure, I do own 50 units. We're trying to keep, I'd like the price to be down, so this really is doing you a favor. Okay, what is it? So management, they are investment focused. Brookfield Asset Management Group, very famous, very long track record. CEO Bruce Flatt will be a future featured winner. They're an elite management team. They've got other things they're in. They can access the cash from the Brookfield parent company, and they're global. There's a project in Brazil that's going on coming up. I think that was July the 20th, so that's pretty fresh news. They'll go anywhere, Peru even, that's one. So the industry, green energy, we know it's growing like crazy, and it's getting more favorable. Insurance, government regulations, all that. Book value increases. If you own a windmill farm, guess what that is? That's land, and it's an asset that you can't just start a windmill farm once a week, right? So the value, perhaps, you never know for sure, but hopefully the idea is that they own things that increase in value versus maybe other business assets that would decrease in value. What that allows them to do is financial engineer, so accessing money at nice rates or refinancing certain holdings and using them to make acquisitions. Earnings were not hurt too badly for the pandemic, and that's partially why you're seeing a lot of these renewable options outpacing the market on the recovery, is because the earnings can be resilient when you have what are called power purchase agreements that can go over 20 years, very financially stable clients. Lots to go into there. Now let's go to the results. So you can see last 3 years, 23, 5 years, 21, 15, 13.65. So remember that 13.65 is just the all time. They went public, it looks like, from the website November of 2015. So 13.65. So remember that when we look at the three ranges of possible returns. And the way I'm basing these is that on the website, they say that they're going to shoot for between 12% to 15% annual returns with a dividend growth rate of between 5 to 9%. So right now, you'll know that when I purchased this one, so this is going to be early June when this one took place, I bought in at 48 a share. So remember that comes with a 4% yield. Price has gone up since then because they announced a restructuring of the holding type because they're a limited partnership, so you need a special tax form. So again, not a licensed gentleman here as far as this financials go. Make sure you consult a tax professional before making this purchase because there will be an extra form called a K1. I went in knowing that. So they shoot for the 5 to 9% increased payment every year, okay? Started at a 4% yield, so okay, that goes up, all right. And then on top of that, we're going to reinvest the dividends. All of this implies reinvestment. And then there's also going to be a price increase. Now, when we add the dividend growth to the price increase, that gives us our total return. So on the low end of 5 to 9%, this is going to be our low scenario. There's a chance they don't hit that, so that's another conversation of risk. What's the risk that they don't hit this? But as we saw by the historical return, this is plenty reasonable given where society's going. So let's move here. So after 10 years, we're looking at $5,800, paying $327 a year versus only $96 that we're starting out at. 4% of this. 71 shares, they're each 71 a pop. Not bad for 10 years. That's the smallest numbers you're going to see today. So after 20 years, we're sitting on 17 grand. paying us out $1,600 a year, After 30 years, 81,000, paying out 11,000 a year. So you're putting in 2,400 and you got to wait the 30, but it's not like people aren't doing 30-year mortgages, so this is not an unheard of time frame. Okay, let's think big. At this point I was starting to say, okay, and this is only going up. I started to doubt the numbers, so I'm running them through the calculator. Dividend.com is where it came from, so you know it's legit. 7% dividend growth right in the middle of the 5 to 9 range, and then that's an ugly 6% price increase. And if you've watched the price on this one, 51% in the last year, okay, this is super not unreasonable. I promise you. A lot of money's going to flow into these too, so be careful. 13% annual return. So again, low balling compared to the historical average. After 10 years, sitting on 66 grand, paying out 434 a year. So we 4x that in 10 years, and we a little more than doubled the value, which is nice. Shares are $85. Now 20 years, here's where it starts getting insane. So 27,000 in value, 3,000 a year in dividends. Do the math on the monthly, not bad. And then 30 years, 237,000, paying out almost 52,000 a year. Read it and weep, folks. I'm serious. It's unbelievable. So here we go to the high estimate. We're going to say a 7.5% dividend increase. Yeah, I wasn't totally overshooting you. You saw 9, but there will be years maybe they don't pay it, they change things around. So let's stay within reason here. This is the top end of their projected range, and these are investment specialists too, so maybe it's not a totally unfounded idea. It's a safer business than a lot that you could think of. This isn't a go-kart track in Branson, Missouri. 7.5% price increase. So after 10 years, sitting on $7,000, making $500 a year on dividends. So we 5x the annual here in the high scenario. You own a bunch of shares, they're almost up to $100. 38 grand after 20 years. Dividend, that's almost $5,000. Not bad. And this is with taxes included, folks. 15% for taxes added on this whole thing. So lest you forget, that was in the formula. 444,000. This is the crown jewel right here that sits atop the head of the king of renewables. We'll see if it's you rocking out with 444,000, making 100 grand a year in dividends. And now let's talk about that 2,400 number, because where did you get it? Oh, it could be from a stimulus check now that we have a second round coming out in 2020. Not that giveaways and handouts ought to be the basis of your wealth building. However, just for perspective as far as, okay, how much is it going to take to at least have some kind of shot at getting anywhere close to that? I mean, even on the low range, $11,000 a year, I'll take that. And it also shows the last remark I'll make is, okay, a 5% difference in the high end to the low end, 15 versus 10. Well, what's crazy is that 5% a year results in $100,000 of dividends versus only $11,000 of dividends per year. So if we look at the 81,000 versus 444,000, 5x the total return. So when I'm talking about making some individual selections on individual stocks or organizations versus just buying the index, this is the potential we're looking at as far as having like, oh, I had something that really did well at 15 versus 10. That's the potential for really making a big winner that exists. And I was completely shocked to Google this. And I get the emails on the news inbox. I subscribe to the investor relations and have for quite a while now, because I'm, as we saw with the in-home windmill, the gears have been turning for a while. And there's only a couple sources on that. So even if not, thousands of people see this right away, I want the record to show that this was something that was on my heart and on my mind. So I hope this has been helpful and informative. Have an awesome rest of the day, week, month, year, 20 years, 10 years, and 30 years, no matter what kind of returns we get, because we're in it for the long haul, and we're in it to maybe even make a difference, right? This is a morally decent cause, I would say. Have a good one, folks.